Good morning, everybody. This is the live market open for Tuesday, November 17th. I'm Yohay, Elam of Forex Crunch and Market Movers, doing the show for FX Street as usual. And as usual, we're going to speak today about recent developments in markets. We had some dollar strength, charts and levels, and what's expecting us in the next 24 hours, which are busier than the past 24 in terms of indicators. And of course, what the most important thing is your questions. If you can't see the chat box under the video, please go to https://fxstreet-forex-live-video. It's on the screen. And let's begin. So what did we have yesterday? First of all, we had Eurozone inflation actually coming out above expectations. Okay, we had the headline figure at plus 0.1% year over year. And core inflation, which came out at 1.1 year over year, stronger than expected. This is contrary to the sort of hint we received from Draghi last week. I was talking yesterday about Draghi saying that the strengthening of core inflation is weakened. Well, it still has strengthened just a bit, nothing really impressive. Anyway, it didn't move much. The euro, Mario Draghi, which spoke yesterday in Madrid, according to all the calendars, I searched everywhere, I couldn't get any headline. What we did have today is, during the night and today, we had another member of the ECB, Peter Pratt. He did speak about monetary policy, the ready to act in December, that's not new. Worried about downside risks, that's not new. But what he did do is tie between the attacks in Paris, okay, the terrible atrocities on Friday night, and monetary policy. So he said that from downside risks have increased because of the attacks. Okay, so this adds another dimension to the easing of monetary policy in December. That's one of the reasons we're seeing a fresh low. Okay, so we've seen a gradual fall in euro dollar yesterday, grinding lower, and now we're under the previous levels, under support line at 106.60. Let's look at the daily chart that I had here just before, because I want to show you that now we're under at 106.15. The drop is continuing as we speak. And these are the levels last seen back here in late April, okay? So we're at, let's say, a 7-month low, right? Almost 7 months. And the next support line for euro dollar is only at 105.30. That's, of course, critical support below and before 104.60, which was the 12-year low for the pair. So good morning, JJ's. Good morning, Fabian. Good morning, Rob. Looking forward to all your questions. So we have this downside move in the US, in the euro dollar. Let's see what else we had yesterday. So we had from Canada, manufacturing sales dropped 1.5%, worse than expected. Bad news for Canada. So we had these figures here. They were expected to drop to rise 0.1%, together with ongoing pressure on oil prices. Okay, we didn't really see new lows in oil prices, but we did see pressure continuing and low prices in general. So now we've bounced back up to 41.60. Well, falling on the day, but we had a bounce yesterday. All in all, we are limited by lower levels, 42.50 and 40, and the pair isn't returning to the previous levels up here around 46, 48. Anyway, and together with US dollar strength and weakness in the Canadian dollar, we're seeing dollar CAD sort of moving 2 steps forward, 1 step back. Currently 133.32. Highest level seen yesterday was 133.70, more or less. And of course, the critical high is 134.60, which was the 11-year high for the pair, 11-year low for the Canadian dollar against the US dollar. Support at 132.80, 132.40, and then 132. Resistance 134.60. It's not that far away. So these are the two currency pairs that I was looking at yesterday, and there's of course action over there. From the US, we also had some figures. We had US Empire State manufacturing index. It missed with minus 10.7%. Not good news. Let's take a look at that for a second. We had it right here. But I think markets are sort of used to see manufacturing, the small sector, in the as a weak sector, and we did have some improvement for the previous month, minus 11.36, but minus 10.74 is worse than expected. Nevertheless, it did not stop the US dollar. Okay, so we have a general trend of US dollar strength. New Zealand inflation expectations 1.9%, exactly like the previous month. Let's look at Kiwi dollar, basically continuing to fall. The fall began before the inflation expectations figure. Okay, it fell yesterday during the US session when the US dollar strengthened, this USD domination, and now we're seeing it sort of struggle with lower ground. Support is around here, 64.50. Further support at 64, I would say, yeah, 64, something like that, 63. Okay, we also had news from Australia, and this is already doesn't look the same. Okay, so we've seen the Australian dollar weaken against the US dollar yesterday when the greenback strengthened, but we had the RBA meeting minutes overnight, and they actually showed that well, it wasn't such a big surprise, but they showed that the Reserve Bank of Australia is not in a big rush to cut interest rates. Okay, we had a strong employment report last week in Australia, and beforehand we had mixed figures. Okay, so it's not all about China. All right, so we do see the pair stabilize above support here at 65, which was support, early in November, late in October, and then worked as resistance last week. Okay, so this is a clear separator of ranges, 70.65. Further support at 70, round number, 71.40 used to be a line of importance, but it's been shattered from all directions. So I would say 71.60 is currently the top of the range. So we have a range of around 100 pips over there. Okay, we have a question from Thibault, if I'm pronouncing it correctly. WTI looks pretty bullish on the daily, no? Let's look at the WTI crude oil. Well, this is the hourly chart. We did have a nice bounce yesterday, but it's still within the larger downtrend. We have to see if we have a real bounce above 42.50 to move higher. Let's look at the daily chart. I can't see this bullishness because I see. Okay, if we have a higher low here, just above 40, and beforehand in August we had it just around 38. So you could look at this as a higher low, but if you look here, we can see also on the daily chart this rise to 50 and then a lower high here. So or if you look at this area, we have a lower low. So I don't see it as bullish. I don't think it'll tumble down and go to 20 or 10, but in general, it's I see more of a downtrend continuing a bit more and not an uptrend. Okay, now we're in this range, 40 to 42.50. Okay, so these are the events we had yesterday. New Zealand inflation, RBA meeting minutes, Empire State. Nothing from Draghi. Today we have more important events. Okay, let's look at what's on the menu. After the show at 9:30 GMT, we have inflation from the UK. Okay, the British pound is returning to the focus. Lots of figures. So we have the most important one is the consumer price index. Okay, the headline inflation figure in the UK, because that's the mandate of the Bank of England. It needs to keep inflation between 1% and 3%, around 2%. Needless to say, because of oil prices, it's lower. So it's around 0. Last time it was minus 0.1 back in September. Now we have figures for October. We're expecting more of the same over there. Okay, this is the FX rate calendar on Forex Crunch. And another figure to watch is core CPI This stood at 1%, and it's expected to remain the same. So we're seeing here that if we look at the bigger trend, also core inflation has been falling. It's perhaps off the lows, but the fall in energy prices, less demand perhaps, which is less the case in the UK, more in Europe, but it's also a bit weak, so it's also worth watching. We have also producer prices, which are less important. Another small figure to watch here is the retail price index, RPI, because it's another measure of what people are actually paying in shops. We had it falling down to 0.8%, and now it's expected to rise to 0.9. So in order of importance, UK inflation data at 9:30 GMT, 9:30 in London, 10:30 here. We have, first of all, headline inflation expected minus 0.1, then core inflation are expected to stand at 1%, and retail price index expected to be at 0.9. So these are the year-over-year figures are more important than the month-over-month in the UK. Okay. So this is the first event we have today. Half an hour later, we have the German zoo economic sentiment. This is the #2 think tank in Germany, not the #1. #1 is IFO. Okay, so we're expecting this is the important figure. The survey for Germany, it fell to 1.9 points, just above zero, just the border between pessimism and optimism in Germany. But I say it's the #2 think tank because IFO carries more weight, moves markets more, and many people see it as what's the mood right now and what's the mood for the future, not future investment. Okay, so if we had the Paris attacks, we had the Volkswagen crisis. That's why you might expect it to remain on relatively low ground. I wouldn't be surprised if it'll fall to negative. Of course, it does have an impact on the euro, but not so much as the IFO that we have next week. So we have this figure, and it's important to note, apart from the headline figure, the economic sentiment one, the current conditions, and the current conditions have been more stable. Okay. Anyway, this is another figure for today. At 1:30 GMT, we have the United States coming in with inflation figures. Here, contrary to the UK, core inflation is more important. Okay, so this is the figure I'm looking at more than anything else. Consumer price index, ex-food and energy, or core inflation stood on 1.9%, expected to remain the same because the Fed focuses on core inflation, not on headline inflation. Okay, they don't care about the price of oil and the price of food. Well, not so much. They care more about things that are less volatile, things that are more long-term. Okay, so we have the month-over-month figures. Headline inflation is expected to remain around zero, like in the UK, like in many other places, to rise from 0 to 0.1. But core inflation is what's important. Okay, that's really the main figure. And we have, I have a mistake here in time. Sorry. Anyway, it's 2:15 GMT. We have industrial output right here, together with the capacity utilization rate. As I said, manufacturing has been a weaker link. We had a fall of 0.2% last month, and now we're expecting a rise of 0.1%. Inflation today is more important than industrial production. And we have milk prices, the bi-weekly event from New Zealand. I don't think we have any expectations from that. We don't even have the time, but it's usually around 3-4 GMT. We had 4 consecutive rises in the price of milk and dairy prices, and then we had 2 falls, 3.1 and 7.4 last time. For those of you trading the Kiwi dollar, this is of course an important release. And during the night we have relatively quiet night, but for those of you trading the Aussie, we have the Australian wage price index. As we know, that's in many cases the source of core inflation, because when we have higher wages, when people get paid more money, they spend it on longer term things as well. So we have it right here. Year over year, we're expecting a rise of 2.3%. Quarter over quarter, this is a quarterly release for the third quarter. We're expecting 0.6%, just like in Q2. Okay, so these are the upcoming events. A busier schedule, markets are moving a bit more. Okay, let's see a follow-up question from Thibaut. Bullish outside bar support after AB equals CD. I must say I'm not familiar with that type. Oh, sorry. Yeah, we had certainly a bullish bar here. Yeah, off support. I'm not sure. Well, I focus more on fundamentals, and regarding the price of oil, as we know, we have too much oil in the market. We have inventories rising and rising and rising. In September, it's usually a month when there's a drawdown from inventories, when companies, gasoline stations, everybody takes oil out of inventories. This month we had a rise in September. Okay, we have OPEC beating records of production. The US shale industry perhaps is producing a bit less, but still very high production. We have an OPEC meeting on December 4th. They're not expected to cut production. The cartel isn't functioning. The countries are fighting between each other. They try to collaborate on the supply side with other countries such as Russia and Mexico. No real success over there. And regarding demand, we have India demanding more oil. That's true. But on the other hand, we have the slowdown in China. And last but not least, each time we have, let's say, an improvement, a rise in oil prices, then shale owners in the United States and in the Dakotas, in Texas, and other places, Kansas, Arkansas, I'm not really sure exactly where they are, but in that sort of belt, they can sort of turn on the drilling quite easily. So if they close down a few wells, they can open up these wells, and when prices fall once again, they can shut them down. So there's much more flexibility in the production of oil in the United States, which is very different from the traditional oil that we have in Saudi Arabia, in Libya, in Norway, in Russia. So all in all, fundamentals to me point to ongoing pressure on oil prices. It doesn't mean a collapse. It doesn't mean those forecasts of Goldman or other banks, sorry if I said it wrong, but that are expecting a total crash. But the general direction for me is down. I was talking a few weeks ago, 2 weeks ago, I think, about the unjustified rise in oil prices. And indeed, we had a fall. So, of course, there's, like Forex, it's never a one-way street. There are always ups and downs and ups. But the trend, as I see it, the fundamental trend is less demand, more supply, lower prices. Okay, so that's around oil prices. Looking forward to more questions. Let's take a look at other charts. And yeah, so during the show, we already had a new low on euro dollar, 106.43, another bounce back up. But the bounces in euro dollar are the type of the dead cat bounce. Sorry if anybody has a cat, but that's just an expression. Okay, so if we look at the past few weeks, each time we had a big fall, rise, another fall, another sort of, each time we have it fall down the window and rise up the stairs, make an effort to rise, make one step back up, and then another fall and another fall. I'm not saying it'll go to parity, but the 12-year lows of 104.60 could be challenged. Question from Fabian: when do you expect a correction to the euro dollar fall, and up to where? Okay, so of course, as I said before, it's never a one-way street. The strong level I see from here is 108.30, because that was a clear separator of ranges. We had it reach a high here on Friday. That was also the low back here on before the NFP, the first week of November. So that's sort of first significant resistance. 110 is another level. I know it's been broken, but it's still on the way up. I believe it'll be resistance. So these are the levels I'm watching. When will it happen? I don't know. We would need some calm in markets. some perhaps think to happen regarding the let's say some optimism from Europe, which I don't see now, or bad news from the US. Let's say we have today inflation data from the United States, okay? And so far, markets in the past few days, on Friday, for example, if it was almost okay US news, just a bit of a miss, markets ignored that. A little bit of good news from the US, markets loved it. Okay, so we're looking at currently a tendency to buy US dollars no matter what. Okay, that's a trend, that's a sentiment right now. But this doesn't last forever. If we have too many weak figures in the US, if we count retail sales from Friday, yesterday's Empire State Manufacturing Index, and if today we have a bad inflation figure from the United States, we could see things maybe shift and see kind of a correction. So from current levels, maybe today a rise all the way to 108.30 from current levels under 106.50. It's a bit hard, but perhaps we'll see a correction back to 107.05, 107.80 maybe, if we have a really bad figure. But if we have an okay figure, markets just don't have a reason not to buy dollars. Markets have reasons to continue the ongoing trend. Okay, so inflation figures in the US are could, if they're really bad, they could lead to some kind of correction, but I believe it'll be limited. But tomorrow we have the biggest event of the week. Tomorrow we have these are the events so far. Tomorrow we have the Fed meeting minutes, okay? And expectations are high. And this could lead to a bigger disappointment if these expectations are not met. Because inflation figures, if they come out at 1.8 or 1.9 or even 1.7 year over year, of course, it's not what markets want to see, but the correction can be shallow. It's also, the Fed looks at another inflation figure, the core PCE price index, okay? But Fed minutes, expectations are huge because, first of all, these were minutes from October. In October, they were more hawkish than expected about inflation and about employment. They also hinted about moving in December, okay? So they were talked about towards the next meeting. It's the first time the words "the next meeting" appeared. In addition, after that October 28th meeting, we had the non-farm payrolls. It was November 6th, okay? So since then, and this employment report was excellent. 271,000 jobs gained, a rise in wages 2.5% year over year. So expectations for the Fed minutes are here in the sky, okay, above where the camera shows my head, and they'll have to meet them. They'll have to give us another hint of a December hike. So if we have the Fed cementing the December hike, they say, yeah, they give us even a bigger hint, then of course it's a stronger dollar. But if they show hesitation, if they show worries about China, about the dollar, about you name it, and of course there are reasons to be worried, it's not all rosy, then this could lead to a bigger correction. But not, let's say 110 is where I see a limit in euro dollar as sort of really strong resistance from current levels. Okay, so we have another question. Give a long answer to that. Yeah, no matter what the news, the greenback strengthens. Yeah, but this doesn't last forever, okay? If we have too many weak figures, this could change. It's a market mood, okay? Ransquack reported some large expiry at 106 and 106.10, 4 billion. Worth watching. Tilman, thank you very much for the information. It's great news. Do you like Ransquack? Is it a good service? I've heard good things about it. Yeah, okay. It's now we're at 106.49. I already reached low 43, nothing new. But yeah, 106, looking at the daily chart, I don't see it as an important level. But if there are option expiries, it makes it important. Okay, next support that I see is the early April low here at 105.30 and then, of course, the March low just after the QE program of the ECB began, and began without any trouble. I reached a low here of 104.60. Okay, so that's sort of that's the line in the sand. On the top side, 107.05, 108.30 strong, and 110. Okay, have any more questions? I'll show you the implied probabilities. Let's refresh it. Talked about this tool many times. It's the CME group tool. So it shows more of the same like in recent days, maybe a bit lower now, but in general, almost 68% for rate hike in December. We're exactly 1 month away, right? 1 month and less 1 day. It's on Wednesday, December 16th. Another question here from Alexei. The greenback is just good because it's good news in fundamentals. And of course, the fact that the economy is getting much better in the US, it is shown in NFP. Yeah, the NFP, of course, was good. Let's show a few figures here to remind everybody what we had there. Have these special slides. So we had 271,000 jobs gained, wages up 0.4 month over month and 2.5 year over year. The real unemployment rate, including discouraged people, fell below 10%, 9.8. Not all is great in the U.S. economy. We had retail sales sort of bumping along. We had other figures sort of mixed, but in general, the U.S. economy is doing better than many other developed economies. And most importantly, the Federal Reserve is about to raise rates, and it's going to be the first time since 2006. So that's the main US dollar driver in the past year or so. Question from Jax: what pairs to watch today? Well, because of the fall in euro dollar, the focus for me remains on euro dollar. It's not new. Okay, let's see if we, at these current levels, if we reach even lower levels, if we have this option expiry, if we have a bounce back up, maybe after 3 consecutive days of falls. So that's an important pair to watch. And of course, I talked about British pound. Oh, we didn't show the charts. Sorry. So quite a choppy British pound in recent days. Inflation figures at 9:30 GMT, very important for the British pound. Currently in range, currently in the lower part of the range, 150 to 152 and 152.50 above that. Higher levels, if we have a strong inflation report, 153 and 153.70. If we have bad news, 151.10 and 150.50. So pound dollar is also an important pair to watch because of fundamentals, because of the news from the UK in about an hour from now. Okay, so that's an important pair to watch. Euro dollar because of the fall, and the New Zealand dollar because of the milk auction in the US session later on today. Okay, so these are the three magical pairs to watch for me today. Yeah, euro dollar also because of the zoo economic sentiment. Again, we have other forces in play. What Peter Pratt said earlier, the ECB member, about downside risks ready to act, and adding that the Paris attacks also also pose risks. That's important. Okay, more than zoo. Alexei asks, on top of that good economy, NFP, housing, etc., there's a big possibility rate hike should be done in December. Yeah, that's right. Wasn't a question, it was an affirmation explaining. Yeah, that's the main reason. Exactly. Okay, any more questions? Talk about maybe more big events in the day. So, not in the day, but in the week, we have, let's just do a small recap. On Monday, we had Japanese GDP come out worse than expected, showing that Japan is in a recession. Okay, we didn't talk about dollar yen. We didn't talk about many charts actually. So dollar yen enjoying this dollar strength. Currently the high end of the range, still under resistance at 123.60, but back above 123, which was sort of a battle line. It always kept a good distance. We talked about this yesterday, from support at 122. Okay, so it reached this 122 level before shooting higher on the non-farm payrolls, and then never even got close. So that's a bullish sign. As I said, I think yesterday, the recession in Japan will probably not trigger action from the Bank of Japan, perhaps stimulus from the government. Okay. But anyway, the Japanese yen is showing some weakness against the US dollar. So that's what we had on Monday. We have another question from Fabian. Euro didn't move yesterday from Draghi's speech. Then at New York, market open started grinding steadily down without any apparent reason. Do you think, well, we've just seen the US dollar strength across the board. No particular reason. I didn't find Draghi's speech in Madrid. I was looking everywhere. If anybody has news from there, I was looking in the Spanish press. I was looking at many great Forex sites that I know, and no news. So it was more a general US dollar strength. This morning, we can attribute the fall of the euro to what Pratt said from the ECB. Okay, so this guy with the beard, this is how he looks like. He's a relatively dovish member. Nevertheless, he has a lot of influence. So this is the guy with the beard. Looks like a central banker. Anyway, so he has the impact this morning. Okay. Question about pound Kiwi. Yeah, interesting cross. Ex-colony of UK. Let's look at that. Yeah, it's on the move higher. We had weakness in New Zealand. We had weak employment data last week. 2 consecutive falls in milk prices, and today let's see what happens. So that's why we had a weaker New Zealand dollar. In the UK, we had the Bank of England hurting the pound while talking about inflation, and today we'll see how bad inflation really is, despite all the good news from the UK. But nevertheless, the pound is stronger. We've seen here this double bottom towards the end of October, in mid-October, 224. We've seen the pair rising. 228, as I see it, as another level. 230, and currently 234.73. It broke above another level of resistance. In general, I see the pair moving a bit higher. The economy in New Zealand is not that bad, but it's just better in the UK. Okay, so I see this level right here at 238.15 as the next level of resistance. And this is very strong resistance. Sorry. No, it's right here. Okay, so it's 246 is really strong resistance on the top side for this interesting cross. Okay, correlation question from Alexei, correlation between euro and pound as a whole. There has been not so much correlation in the past. There used to be a lot of correlation because the euro and the pound traded and sort of the same trends against the US dollar. Of course, we've seen both currencies now weaken a bit against the US dollar, more the euro. In general, there is monetary policy divergence. That's why, happy you talked about that. We're seeing reached low 70.10, just 10 pips above the round number of 70. 70.23 is 70.25. We talked about it in previous shows. See, it was support right here back in August, and now I wouldn't say we have a confirmation of this break, but in general, monetary policy divergence. In the Eurozone, they're expected to print more money. In the UK, to raise rates. Okay, so the trend has been down. If you look at the daily chart, of course, it's much clearer to see. But then we had this big correction, right? So it wasn't sort of one way. After all this big fall, we had a correction, but now we're seeing a resumption of the downtrend. So there's less correlation. We used to have more correlation between the euro and the pound. They used to rise together and fall together against the dollar, with the pound doing more extreme movements. But now there's monetary policy divergence between the Bank of England and the ECB. Do you look at silver? Not really, but let's see if it's a sag, isn't it? Silver prices. I think we have a trend here. No, it's down in the past month or so. Yeah, it fell below previous levels here. Let's put a few lines just for quite choppy, isn't it? Next support line at just under $14. Silver, like gold, less than gold. Silver we have less speculation there. It's more industrial use, but also some speculation. In general, I see it, well, doesn't have lots of room for the upside. Question about from Thibault: how are you looking at the yen pairs ahead of the meeting? Which meeting are you referring to? The Bank of Japan's meeting on Thursday? I see the yen as weakening in general because we have a recession in Japan. Let's look at euro yen, for example. Okay, here we had a false break because of this. In reaction to the Paris attacks, we had safe haven flows, and this favored the yen, which is the safe haven currency. So we had this gap down, and the gap was eventually filled because after each panic, there's a counter reaction. But now perhaps we're seeing the real move. Okay, now perhaps we're seeing another fall below 131.30. It's more related to euro weakness at this point. Okay, and pound yen. Here we have better chances. Here we have another story. I have a chance to rise to the upside. 188.10 is important resistance here because it was the top line back in September. So UK expected to raise rates. Japan on recession, perhaps not acting, but showing some weakness. So I believe the trend here is to the upside. Okay. Another silver and gold charts look the same. Yeah, they trend together. They also have a good correlation with other metals such as copper, which is less speculative, more for industrial use. I focus on Forex, but always look at oil and sometimes at gold because everything is always correlated. Okay. So regarding previous question, the yen is, I think, weaker in the ranking than the pound, but against the euro, it's an ugly contest. There used to be the safe haven currency, but now I think the euro is weaker than the yen. We could see further falls over there. Okay. Another question about what figures are considered good, average, bad for ZOO. Well, first of all, it's easy to talk about ZOO in the context of just the zero level. Okay. Zero is the border between optimism and pessimism. And we might fall back to pessimism now because we're only 1.9 points. We had good figures above 50. 50 is really good. As you can see, around the financial crisis, we had it fall below -50, and at the highs we reached just above 50. So this is really good level. Currently, we're on the border, on the brink between pessimism and optimism. So this is a critical level. Expectations for today stand at a rise from 1.9 to 5.5. So more optimism, but still weak levels. And so these are the figures to watch today. You also ask about US inflation, USD output data. So for inflation, the most important figure is core inflation year over year. It currently stands at 1.9%, and that's good because that shows us That's right here. We don't have expectation. Oh, we do have 1.9. It's expected to remain the same, okay? But we're if it stays around this, around 2%, that's good. It's not the figure the Fed is looking at. It's looking at core PCE price index, and it's also looking at employment. So it's a bit more complicated in the US. But if this is the first thing to look at, okay? If it rises to the magic 2% number, it's really good news for the United States. It's really means a bullish US dollar. If it falls to 1.8, it's not so bad because, as we said, there is this general bullish trend that favors the US dollar. If we have it fall to 1.7 or 1.6, that's already bad news. Another figure to watch is the year-over-year CPI figure, headline CPI, not core. And of course, there are monthly figures. Then 45 minutes later, we have the industrial output number expected to rise. If we have another fall, and if we have a big fall of, well, let's say 1%, it's bad news. Okay, but if we have it around zero, a bit above, a bit below, yes, it matters a bit, but not as inflation today. Okay, so these are the figures I'm looking at. Okay, have any more questions before we begin the wrap up? Yeah. Okay, so let's move to the wrap up for today. Before that, let's just take a peek at the euro dollar chart. Very weak, 106.47. This is the hourly chart. Okay. Let's begin the wrap up. So this is the wrap up for the live market open, Tuesday, November 17th. We had a stronger US dollar across the board on rising expectations for a rate hike in the United States. No real event to put the finger on. In terms of data, we had a weaker US Empire State Manufacturing Index, missed with minus 10.7. In the Eurozone, inflation actually came out sort of a bit better than expected. But what we had today, the biggest impact on the markets came from this guy, Peter Pratt of the ECB. He tied downside risks to inflation, to the economy, also to the Paris attacks. That's new. And of course said they're ready to act and there are downside risks and they're afraid of a deflationary cycle and things like that. So we had a weaker euro dollar today. That's the main development. We have the ZOO figure later on in the Eurozone, and that should move the euro a bit more. In addition, what we had yesterday, before we move to other events today, Canadian manufacturing sales disappointed, together with oil, which is not really bouncing. We have a weaker Canadian dollar, New Zealand inflation expectations unchanged. Today we have the milk auction from the Kiwi, from New Zealand, and that should have an impact. And before that, we have the UK inflation figures. We're expecting around zero year over year. Headline inflation is the most important one, then core, then RPI. The Bank of England warned about inflation, so the other figures are good, so that's something to watch. Pound is weakening, reaching support, 150, 150 is support, 152, 152.50 resistance, 150, 110 support. Okay, then the big event, talked about ZOO. The big event for today is US inflation, 1.9 core inflation year over year. That's the most important thing to watch. It's important for, let's talk about currency pairs. Euro dollar breaking below 106.60. 106 we had option expiries there. 105.30 is further support before 104.60. On the top side, we have 107.05 and 108.30. Okay, dollar yen also on the move higher, still under resistance at 123.60, support 122.80, 123, further support 122. Nothing from Japan. Canadian dollar 133.30, edging up. 134.60 is the critical resistance line. That's 11-year high. On the downside, we have 132.80 and 132.40. Aussie dollar received some okay news from the RBA. The meeting minutes showed no rush to cut rates, so currently holding above support at 70.65, resistance is at 71.60. Further levels are 72, 72.80, and on the downside 70. Kiwi dollar awaiting milk prices, currently 64.59. Further levels on the downside 63. Anyway, we're seeing a decline of the Kiwi dollar. Okay, markets are getting busier today. We have more events, more action. Tomorrow's big event is the Fed meeting minutes, but we don't have to wait for that to see quite a lot of action in markets. And yeah, let's one more thing to add is that in general we see a general the trend of US dollar strength. Small misses on the US indicators are shrugged off. Markets say it's nothing, but remember, if we have too many of these, we can have a change of trend, and that could be and that could happen sort of in any moment and can be quite strong. But if we have okay figures in the US, we don't have to have really good ones, then we could see the trend continuing. Okay, so that's the wrap up for today. Thank you very much, everybody, for coming to the show and for your excellent questions. I'm waiting for more questions tomorrow. A small note, tomorrow we'll begin just a one-off. We'll begin tomorrow at 9 GMT, not at 10. Okay, so it's not at 8. We'll begin 1 hour later tomorrow, just tomorrow, okay? Because there's some things I have to do. So just tomorrow we'll begin 1 hour later. Of course, you can see the schedule on the FX Street website. You can see the recording of the show, recording of the wrap-up, of course. And so hope to see you tomorrow 1 hour later than usual. It's only tomorrow. It's not change. And let's see if this dollar strength continues. So good luck, everybody, and see you tomorrow. Bye-bye.